Okay, let's jump right into a really common concern people have about annuities. There's this idea out there, this myth really, that when you buy one, you've basically locked your money up and thrown away the key. We're going to break down exactly why that's just not true for most modern annuities.
This is the big one, isn't it? It's the #1 fear I hear. People think you hand over your life savings, and that's it. You've kissed that principal goodbye just to get an income stream. And you know what? That's a really intimidating thought.
Well, in pretty much all modern cases, yeah, it absolutely is. So let's unpack the truth here, because the whole point of an annuity isn't to give up your money. It's actually the opposite. It's to protect your money from market drops and use it in a smart way to create real security for your future.
You know, this fear usually comes from one of two places. Either it's just a simple misunderstanding of how these products are designed today, or, and this is unfortunate, it comes from someone getting a bad recommendation that didn't take their need for flexibility into account.
So here's the most important thing to get your head around. You're not forfeiting your money. You're simply, well, you're restructuring how you access it. You're making a trade for some really valuable guarantees, like protecting your principal and getting an income that you literally cannot outlive.
All right, let's get into our first solution. I want to show you how this works in one of the most popular types of annuities out there today. This is where you can really see that mix of safety, income, and access come to life.
We're talking about something called fixed-indexed annuities, or FIAs for short. Now, these are designed to give you two really powerful layers of protection. First, your principal is safe from market losses, and second, it can provide an income that's guaranteed for the rest of your life.
Now, check this out. This combination of benefits is key. You can turn on a guaranteed income stream that you'll get for life without giving up your principal. And if you pass away, whatever is left in the account value goes straight to your heirs. That's huge peace of mind for you and your family.
And this right here gets us to that built-in access we've been talking about. Most fixed-indexed annuities let you pull out up to 10% of your account value every single year without paying any surrender charges. So think about it. What if an unexpected expense pops up? Maybe the roof starts leaking. This feature gives you a ton of flexibility.
Okay, now for another solution. What if your main goal right now isn't lifetime income, but you're looking for predictable, safe growth, while still keeping your money within reach? Guess what? There's an annuity for that too.
They're called multi-year guaranteed annuities, or MYGAs. Honestly, the easiest way to think about an MYGA is like a CD alternative from an insurance company. It works a lot like a bank CD, but often you get higher interest rates and your growth is tax-deferred.
These are just ideal for anyone who wants to park their money somewhere safe for a specific amount of time, maybe 3, 5, or 7 years, but you still want some access, just in case. And at the end of the term, you get all your money back plus all the interest it earned. Simple as that.
And hey, sound familiar? Just like the FIA we just talked about, a typical MYGA also lets you take out up to 10% of your money each year without a penalty. So again, even while your money is growing safely with a guaranteed rate, you are not totally locked out from it.
So, we've got these two really popular options. How do they stack up side by side when it's all about getting to your money? Let's put them together and take a quick look at the main similarities and differences.
This table makes it super clear. You can see right away, both options give you that awesome 10% penalty-free withdrawal each year, and both give you full access to everything after the initial term is up. The real difference is their main job. An FIA is built to create that lifetime income, usually with an add-on called an income rider. A MYGA, on the other hand, is built for safe growth over a fixed period.
The big takeaway here is that the power is, and always should be, in your hands. A good retirement plan lets you balance exactly what you need, whether it's guaranteed income, cash for emergencies, or leaving a legacy. You get to call the shots.
You know, following these simple steps is how you make sure you never feel locked in. You can build a really flexible retirement plan just by being smart about how much money you put in, picking the right product with the right features, and yeah, getting advice that's actually tailored to what you want to achieve.
Let's circle all the way back to that first question we asked. As you can see by now, the answer is a pretty clear no. With the right annuity, chosen for the right reasons, you don't lose your money or your control. In fact, you could argue you gain more control over how it's protected from risk and how it's going to pay you reliably for the rest of your life.
So, if you'd like to find out more about how you could structure an annuity that gives you that built-in liquidity and guaranteed income, we're here to help. At The Annuity Expert, we can help you compare all the different options out there, and our services are always completely free to you. You can give us a call at 770-755-1565 or find us online at annuityexpertadvice.com.